Welcome to the StockOptionAssassin.com's weekly video for swing trading options. This is Eric. Today is November 2nd, 2012. It is Friday. We're going to take a look at gold and how we've been trading that the last few weeks with our members. And you can see basically what we've been looking at is looking for a significant reversal. Obviously, gold had been in an uptrend here for a while. But you can see as gold has gotten outside of these bands, and these bands are a modified Keltner channel that we use here to kind of identify overbought, oversold areas. You can see gold, strongly moved outside those bands. Basically had a weekly squeeze going on that fired long, and this thing pushes it through the bands. But you can see as of this week in mid-September, gold kind of put in this doji, this pause candle. Then the next week had a little bit of a dip, came back up, and then put in another doji candle. And still all of this is outside the band. And as that's happening, the Keltner channel is starting to kind of flatten out a little bit, signaling that there's a potential reversal signal here. So that next week, as gold starts to take out the low of the previous candle and trade back inside these bands, let me switch back. Let me zoom in on the daily chart now. Now we're really looking for entries for swing trading on the daily chart. So now we have a little bit of some confidence that gold is looking to reverse. And listen, it doesn't have to be a crash. This could be a simple sort of pullback in the context of a bigger, larger uptrend. But in this case, gold started to trade back inside, and the momentum, you can see a 917 in this area. The squeeze indicator on the daily chart had already rolled over. So momentum is already moving down as gold's trading flat. And it basically weighs heavy on the gold chart, on the daily chart. And as we crossed under these moving averages, and here I have a 13 EMA is that purple line, and then the yellow is a 20 simple, 50 simple here for the blue, and then a 200-day simple moving averages. So as the moving averages start to roll over here as well, on October 10th, you can see we took a short trade on this day, partially because the momentum's rolling over. You're getting a rollover in the weekly chart, moving averages are rolling over, and you're more importantly in a daily squeeze here, and that daily squeeze is looking to fire short. So this thing is moving lower. So we entered the short trade here on the 10th, and a few days later we got a 60% gain on our gold puts, GLD puts. Now, discipline has us take profits, and basically why we took profits at this level is a couple of reasons. First of all, this was the move we had, and you can see that we had a retracement. As soon as we took out those lows, we got to this golden ratio extension that tells us, hey, we should take some profits. And sure enough, that was a good place to take profits. We put a second half or break-even stop on the second half. So as we reversed up, we actually got stopped out of the second half here for break-even. And, it actually rolled over from there. So we did not catch the entire move. But nonetheless, this downtrend is intact. We move, it continues to come back in here. We waited for the retracement. And yesterday, as gold put in a bearish engulfing candle, and, if you look at the spiders yesterday, we had a nice little rally. This was kind of, gold was telling you that rally was not going to be sustained. And ultimately, gold rolled over. We're down, 2% today. We still have an hour left of trading. But essentially, we're up another 60% in the first half. We're putting a break-even stop on the second half of this trade. And what we're looking for targets now is our next impulse leg. We actually took profits right here at the 27 extension. We are looking for a move to the 618, which would coincide with the 200-day moving average. And at that point, we would take more profits, maybe leave a runner. But I do think that this 161, 162 area, it's going to be pretty significant for gold. You can see over here we actually have a little bit of a congestion here. So, maybe you trade down to the 160, 159 as a low spot, but this is where we would want to take profits. So basically what we're doing here in our market timing service is looking for multiple time frames, using a nice little number of indicators to sort of help us find that momentum and help use the momentum and use things like Fibonacci for targets and also exits as well. So, if you want to learn more about these swing trade methods, including the modified Keltner channel, the squeeze, and Fibonacci, go to our website, check out our 30-day challenge, and there's a video there. And in that video, you're going to see another Fibonacci trading technique that has a 70% probability win rate I think it's something that would be very useful to you. So if you have any questions about that, let me know, and we'll see you guys next week.